Good afternoon, Nilta.
Good afternoon, sir.
Have you gone through yesterday's portion? Whatever we did in the last session?
Yes, sir.
Now, what we are going to do today is going to be very important. Can you see the Kaplan material? We were doing tangible non-current assets.
Yes, sir. Today we need to start with the investment property.
Yeah, IS 40.
Yes, sir.
Okay. So this IS 40 is property that is purchased by the business or by the entity, but it is not used for the business purpose. So I can see that I've written over there, not used for business purpose. So it is purchased. Now, for example, I'm having surplus cash in the business. So I decide to invest that cash for purchasing some property, which I intend to use as investment, where I can keep that property as investment with me and wait for the appreciation in the value of the property. Or alternatively, I can let out the property on rental basis and earn rent from that. So either way, I'm going to be receiving some amount of income or a profit from that property. So that property is not used for a business purpose, neither as an administrative office or as a factory building, but it is used to earn income and to make profit. So investment property which is held in such a way is covered by IAS 40. So investment property is land or building which is held to earn rentals or for capital appreciation or both, rather than for use by the entity or for sale in the ordinary course of business. Owner occupied property is excluded. You can see that they are specifically mentioned. owner occupied property is excluded from the definition of investment property. So these are properties not used by the entity in general operations. So these could be spare properties rented out to third parties or specifically bought in order to profit from a gain in value. There could be a situation where a building can be accounted for in two different ways. If an entity occupies a premise but rents out certain floors to the other companies, then the part that is occupied will be classified as property, plant, and equipment as per IAS 16, and whatever is rented out is classified as investment property. So, as they are saying, that let us say we are occupying the ground floor and the first floor for our administrative purpose, administrative office. And from third floor, second floor, third floor, and fourth floor, three floors are given on rental basis. So of that building, the ground floor and the first floor will be considered as IAS 16, property covered under IAS 16. Second, third, and fourth floor will be covered under IAS 40. So in the same building, you can have distinction. Then you have accounting treatment for this. Investment properties should initially be measured at cost. That means IAS 40 says that, again, as we had for IAS 16, that all the properties should be initially measured at cost. IAS 40 then gives a choice for subsequent measurement. So subsequent measurement, there is a choice where you can use either the cost model or the fair value model, like you had in the case of IAS 16. Once the model is chosen, it must be used for all investment properties. That means you can have different investment properties held under different models. So once you select a particular model, either the cost model or the fair value model, then you have to apply that for all the buildings, all the property classified in that category. Now, if it is cost model, then same thing as per IAS 16, whatever we are going to do, the same thing we are going to do here also. You will take the historical cost minus the accumulated depreciation and will show the carrying amount of the asset. If I'm going as per the fair value model, then there are certain conditions to be met. What are the conditions? The conditions are, number one, that asset will be revalued to fair value at the end of each year. That means each year you have to find out what is the fair value. Fair value is market value. What is the market value at the end of each year and revalue the property. Second, the gain or loss is shown directly in the SOPL and not in the OCI. So if it is IAS 16, you show it under OCI. If it is IAS 40, you show it under SOPL. So remember the difference when it comes in the examination. And no depreciation is charged on the asset. If it is fair value model, you don't depreciate the asset. Only if it is cost model, you will depreciate the asset. Fair value is normally established by reference to current prices on an active market for properties in the same location and condition. Now, come to this part. This part is very important. This entire part that you can see where all red markings are there, it is basically a conversion of a property which was originally covered under IAS 16 that is now covered under IAS 40, and vice versa, that is a property that is normally purchased as investment that is now converted into a property which is going to be used for business purpose. Okay, so it is conversion, it is related to conversion. If an asset is transferred from property, plant, and equipment, that is IAS 16, to investment property, that means a property which was originally under IAS 16 is now transferred to IAS 40, and the fair value model for investment property is used. So the problem arises because in the case where we are having this conversion, there are two models which are applicable, the cost model and the fair value model. So it may happen that originally you are holding it under cost model and then you are transferring it to revaluation model or vice versa. So in that case, what will be the implications of reporting? So if an asset is transferred from property, plant, and equipment, that means this is implied to be IAS 16. to investment property, that is IAS 40. So we are converting from IAS 16 to IAS 40. And the fair value model is being used. Then in that case, the asset must be first revalued as per IAS 16. Because originally it was IAS 16. So it will be, and it was fair value model. So under fair value model, what do? You revalue the asset. So you will revalue the asset first. And since it is under IAS 16, the revaluation profit goes to OCI. It is not going to be transferred to SOPL. And then transferred into investment property at fair value. Okay. So initially it is IAS 16 and revaluation model. So first you will revalue that particular asset because it's revaluation model. Okay. And revaluing, after revaluation, whatever revaluation surplus you get, what do? You transfer it to OCI as a revaluation surplus. Okay. And then that property becomes a investment property at fair value. If the cost model is used for investment purpose, the asset is transferred into investment property at the current carrying amount and continues to be depreciated. Because if it is cost model and then it is first IAS 16 transferred now to IAS 40, as per cost model, whatever depreciation was being calculated there, the same amount of depreciation will be now calculated here also. That means depreciation will continue. This part is clear. So the first 2 points are in relation to transfer of IAS 16 to IAS 40. So if it is transferred from IAS 16 to IAS 40 and it is revaluation model or fair value model, then first revalue the asset, revaluation profit transfer it to revaluation surplus under OCI and then treat it like a IAS 40 asset where no depreciation is going to be charged. If it is cost model, then very simple, just transfer it from this particular section to this section. So IAS 16 to IAS 1. No other calculation. Depreciation continues. Now, second part, if an asset is transferred from investment property to property, plant and equipment, that means we are transferring it from IAS 40 to IAS 16. And we are using the fair value model. So what do? We first, as we have done over there, here also we will revalue the asset, but the profit or loss and revaluation under IAS 40 goes to SOPL. And then it gets transferred to IAS 16. Once in PPE, depreciate the asset for the remaining useful life of the asset. That means, though it was under IAS 40 fair value model, when it gets converted into IAS 16, irrespective, depreciation will continue. Okay. Second part, if cost model is used, then the asset is transferred into property, plant and equipment at carrying amount and continues to be depreciated. So same thing is there, but only this point you have to keep in mind. So there are so many things which are coming in now, as I told you, conversion, then cost model or evaluation model, which method it is first and which method it is going to be transferred to. All these things you have to be careful about. Any doubts? I give you 5 minutes, go through this entire point. Then we'll take test your understanding name. Done?
Yes, sir.
Okay. Now, Vinita, tell me, from last session, after I told you that you have to, after you have given that test, one test you have given on that test, what additional things that are you doing to ensure that you are going to get more marks in the future, or you are going to do better in the future?
Sir, first I used to read directly from the PDF.
Hmm.
The highlighted ones, the underlined ones, everything I used to read directly from the PDF.
Hmm.
But after the test onwards, I am writing down all the concepts and analyzing and keeping in mind more. While I'm writing, it is more memorable, sir. So I'm writing the concepts.
That is better, because when you are writing and learning, you know what you are writing. If you are just reading, then you feel that I know this, and then you try to pass it off. So when you're writing, you
Yes.
actually know what you are writing. Actually, yeah, good. Test your understanding 9. Kyle Company purchased an investment property some years ago and carries it under the fair value model. On 1st January 20X1, the property had a fair value in Kyle Company's financial statements of $12 million. On 1st July, Kyle decided to move into the property and use it for its own business. On this date, the asset had a fair value of $14 million and the remaining useful life of 14 years. What amount should be recorded in Kyle Company's statement of profit or loss? First, it is an investment property and it was under fair value model. So now you will have to revalue the property. So originally it was showing a value of $12 million. We have to now revalue it to $14 million. So there will be a revaluation surplus. Now revaluation surplus cannot be shown in OCI because it is IAS 40. So revaluation surplus will be transferred to SOPL. Right? Now SOPL you are transferring it to how much? You are going to transfer $2 million. From 12 to 14, there has been an increase of $2 million. Now, after that, what you will do? That $14 million is going to be written off over a period of 14 years. So the depreciation as per the new method now, that means once it is IAS 16, then 14 million divided by 14 years, it will be 1 million depreciation charged to SOPL debit side. So SOPL debit will be having $1 million as depreciation. SOPL credit will be having profit on revaluation, that is $2 million. Okay, so that is the answer for it. I think that's it. We have completed with this particular topic. So chapter 2 comes to an end. Pay attention more on the government grants, interest, and this conversion part that we are having. So slowly and slowly we are trying to cover one topic here. So 4 chapters are already over. This is just the starting. These are all small chapters. We'll now come to chapter number 5 because it is a continuation of tangible non-current assets. Okay. So So what is the title here? It is non-current assets which are held for sale and discontinued operations. Non-current assets, we have seen 2 items now. Non-current assets held under IAS 16 and we have seen non-current assets held under IAS 40. Now you are going to see non-current assets held under IFRS 5. IFRS 5. So IFRS 5 talks about assets held for sale and discontinued operations. So basically it is a very small chapter, but a very important chapter because it comes under different topics. IFRS 5, which deals with non-current assets held for sale and discontinued operations. The objectives of IFRS 5 are to set out requirements for the classification, measurement, and presentation of non-current assets held for sale. In particular, requiring that such assets should be presented separately on the face of the statement of financial position. That means they should be shown in the balance sheet. Updated rules of the presentation of discontinued operations, in particular requiring that the results of discontinued operations should be presented separately in the statement of profit or loss. Now, when will an asset be classified as held for sale? An entity shall classify a non-current asset as held for sale if its carrying amount will be recovered principally through a sale transaction rather than through continuing use. Now, what is the scenario that you must know before you learn the points? The scenario is like this, that in a company, there may be 3 different divisions, say division A, B, and C. All the 3 divisions may not be resulting in a profit. Division A is giving you profit, C is giving you profit, but B is not giving you profit. It is resulting in a loss. Now, because of division B, the overall profit of the company is being pulled down because B is having a loss. So, A may be having a loss or a profit of $10 million. C may be having a profit of $10 million, but B may be having a loss of $8 million. So 10 plus 10, 20. 20 minus 8 is $12 million. So that division B, if it is not there, you will actually get a profit of $20 million. But because B is there, it is pulling down the profit by $8 million. So the company decides to wind up with the business, close down the business. Division B is to be shut down. Now, division B is to be shut down. The question is, just a minute, I'm getting a call. What I observe in the statement is that even the first computation of tax that you have done, the HRA deduction was not exactly the same because you have calculated something like 99,000, but I'm actually entitled to a deduction of 1,224,000, something like that. Yeah, I know that. Yeah, I have got, so actually 40% of the taxable amount of salary is coming to 1,37,756. That you have shown correctly. Actual HRA received is 1,224,000. And rent paid minus 10% of salary, that is coming to 1,09,511. So the lower of the 3 will be 1,224,000. So as per section 1013A, I think I should be getting 1,224,000 as deduction. Yeah. To simplify my work, I had given it to a chartered accountant. Now, chartered accountant doesn't know the rules of tax, so I have to teach him now first the rules of tax and then tell him as to how to file my returns. So that is taking my time. Only thing is that he has done is he has done the compilation and the filing of the returns, but even in that there is some error. So if it goes for filing of returns, actually, there will be an error and I will be getting less benefits. So you have to be after, you can't leave everything to the chartered accountants because they are also liable to make mistakes. Sometimes it is said na, that an old compounder is better than a new doctor. New doctor, when he comes, he is just fresh, he doesn't know what medicines to be given. But the compounder who has always been sitting over there at the doctor's clinic, he knows exactly what medicine is to be given. It is like that. So as I was saying, one of the divisions, division B, needs to be shut down. And since division B needs to be shut down, they have taken this decision in the middle of the year. So let us say on 1st of August, they take the decision to close down. Actually, on 31st July, they must have taken the decision that from 1st of August, we'll be closing down. 1 second. Yes, Mike. Yeah, yeah, yeah. Hmm. 1 second, sir. I'll just check because I was just using my calculator. The HRA is actually coming to 1 second. It is coming to 16,704 something I'm getting. Hmm. Okay, okay. You are going month-wise. You're fine, fine. Yeah, then it's right. Yeah, yeah. Okay, then it is fine. Yeah. So just yeah, just send me the revised copy of that. I'll go through and then you can file it by tomorrow or by Monday earliest. Yeah, yeah, sure. So division B is to be closed down on from with effect from 1st of August. Now this division B needs to be closed down. They have taken a decision, but since it's a big company, you cannot just say, okay, from tomorrow we are not going to come. What about the assets? The machinery is there, the factory building is there, the workers are there. Workers, so at least they can be accommodated in other divisions. But what about the machines? What about the assets? So, number one, the first thing that is going to happen is that division B with effect from 1st August will be called as what? Discontinued operations. The full accounting standard is what? It is non-current assets held for sale. That is one part. What is the second part? Discontinued operations. So that division B from 1st August to 31st December, if it is not sold completely, it will be called as discontinued operations. Now, though it is discontinued in the middle of the year from 1st August. So till 31st July, it was working. Till 31st July, it was working. Fine. So there will be trading results from 1st January up to 31st July. That is either a profit or a loss. Now, since I told you that it's loss making, there will be a trading loss with effect from 1st Jan to 31st July. So that has to be shown in the SOPL separately as trading loss from discontinued operations. Okay. So division A and C will be combined and shown together as profit from operations. But division B will be shown separately as profit from, loss from or trading result from discontinued operation. It has to be shown on a separate line. That is one. Second, from 1st of August up to 31st December, some assets may have been sold. Some assets. You can't sell all the assets within 6 months, 5 months. So some assets must have been sold. And on those assets which are sold of that discontinued operations, you may have made some profit, you may have suffered a loss. So the profit or loss, gain or loss arising from sale of discontinued operations asset, that will also be shown in the SOPA. So under the heading discontinued operations, there will be two items. What are the two items? Trading results of the discontinued operations, and second, gain or loss arising from the sale of assets of the discontinued operations. This is clear? Now, that is as far as the second part is concerned, discontinued operation. What is the first part? Assets held for sale, which means that all the assets are not sold. Some assets are sold. I told you, assets are big machineries, building, ACs. So all that cannot be sold one day. It cannot be sold within 2 to 3 months also. It will take time. Because you have to find a suitable buyer. You will try to make profit out of it. So you will bargain. So it takes time. So by end of December 31st, suppose all the assets are not sold. Only 20% of the assets are sold. 80% is still there. What you will do? You have to show it in the balance sheet. But can you show it as IAS 16? You can't. Because you are not using it for a business purpose. Can you show it as IAS 40? No, you can't. Because you are not holding it as investment property. So why are you holding it? Because it is asset from discontinued operations, which is going to be sold in the near future, held for sale. Non-current assets held for sale from discontinued operations. That comes under IFRS 5. Now to show it under IFRS 5, now the first question comes, where will I show it in the balance sheet? IAS 16 will come as non-current assets at the beginning of the balance sheet. IAS 40 will come next. Where will this come? This will come not in non-current assets. It will come in current assets. If you remember in the very first lecture when we were doing the balance sheet, there was an item circled, assets held for sale, which
Yes,
came
sir.
with the current assets. I told you I'll come back to this. Assets.
Yes, sir.
So it is going to be held under current assets, not under non-current assets. Though there is plant, though there is machinery, though there is building, it will be shown as current asset. Why? Because it will be sold in the next 12 months. Within the next 1 year, we are going to sell it. So now to hold these assets as assets held for sale, there are some conditions. So what are those conditions that we have to see here? The first condition, asset must be available for immediate sale in the present condition. That means whatever is the state of the asset, whether it is worn out, it is damaged condition, whatever is the present status of the asset, it should be saleable in that condition only. So you are ready to sell the asset immediately in the same condition that it is. That is first condition. Second condition, sale must be highly probable. So in that you have got three parts. A, B, and C. Highly
Sir, I had one idea right now. So if they have to sell the asset in its present state, they'll get the value for that condition, for the state of the for the asset in that state. What if they repair the asset, and can they expect
No,
gains?
then it will not be held under IFRS 5. If you are going to repair the asset, that means it is not going to be sold in the present condition. Then it cannot be coming under IFRS 5. Then you will have to show it as IAS 16.
Sir, but it will be held for sale, no, sir.
If it is
We'll
held for
repair it
sale, then you
for
can't do repairs. No, you can't do repairs. You are not allowed to. That is why
okay,
it is one of the conditions that it must be sold in the present state without doing any modifications. Okay?
okay,
That's the first condition. Second condition, the sale must be highly probable. Means the probability of sale will be very high. If the probability of sale is going to be very high, what are the three conditions? What does it mean? It means that management is committed to sell the asset. Management has already taken a decision, for sure they are going to sell the asset. Second, there is an active program to locate the buyer. So management must have given some advertisements in the newspapers, inviting tenders to sell the asset. Those who want to buy, please submit a tender. We'll see whether it is favorable or not. So they must have invited tenders from the public. Third, it is actively marketed at a price that is reasonable. Many times what happens, I feel like selling an asset, but I have an attachment to it. So I don't want to sell the asset also. So both the feelings are there. I want to sell the asset also, but I don't want to sell the asset also. So what I will do, for example, I was having a two-wheeler which was purchased with my first salary, first income. And after about 6 to 7 years, that two-wheeler got old and then it started giving trouble. And literally every morning before going to work, I had to kick the bike and then start it, and then sometimes take the bike running with me, and then I will jump onto the bike to start the bike, something like that I will do. So my mother saw this. She said that enough of this now, sell the bike. Because it's gone old, it is beyond repairs, and even if you repair it, every day is going to break down. So sell the bike and purchase a new one. So I said to sell the bike, I'm having some emotional attachment to it because it is out of my first salary that I purchased that bike. So I didn't want to sell it. But it has become old, and I also know that it is not in a good condition. It is not going to last for a long period of time. But at the same time, I don't want to sell it also. So what to do? Every day my mother used to fire me, shout at me. And then one day she told me, if you are not selling it, I will sell it. So I said, wait. So I told her, see, I will sell. I purchased this bike for 60, 70,000. So I should get at least 15,000 for this. I knew that it is not worth 15,000. But I told her that I will sell this bike if anybody is willing to give 15,000, you sell it. Because whole day I'm not at house. Anybody comes over here, I'll keep the bike over here. Anybody comes, you show them the bike, tell them 15,000, take the bike. But I knew that the bike is not even worth 5,000. And the same thing happened. Buyers used to come, they used to check the bike and they used to say 5,000, 7,000. My mother used to say, no, I will not sell it if it is below 15,000 because my son has told below 15,000 is not going to sell. So I have told my mother that I want to sell, but I have given her an unreasonable price so that she cannot sell. So it should not be that the management of the company has declared to the public that we want to sell the assets, but they are quoting an unreasonable price. So the third point is that asset is being actively marketed at a price that is reasonable. Condition number 3. Sale is expected to be completed within a period of 12 months from the date of classification, not from the end of the financial year, from the date of classification. In our example, the classification date was 1st August. So from 1st August of that year till 31st July of the next year, within 12 months, it should be sold. And condition number 4 is that it is unlikely that significant changes to the plan will be made or that the plan will be withdrawn. Like, for example, what you said, that what will happen if I sit down to repair the machinery and put it in good condition? Then that means there is a significant change in the plan. You don't want to sell it as it is. So for asset to be shown as an asset held for sale under IFRS 5, all these 4 conditions should be satisfied. And this is a very important question in the examination. Now, measurement of non-current assets held for sale. So first we have seen the recognition, now the measurement. Non-current assets that qualify as held for sale should be measured at the lower of the carrying amount and fair value less cost to sell. Lower of, that means whichever is less. So they have to be valued either at their carrying amount or fair value less cost to sell, whichever is less. What is another term for fair value less cost to sell? Tell me.
Residual value, sir?
No.
It's called NRV. No, net residual value.
It is not residual value, net realizable value.
Net realizable value. Yes, sir. NRV. Net realizable value.
So it is held for sale, non-current assets should be, it is either at the carrying amount or at the NRV, whichever is less. Held for sale non-current assets should be presented separately on the face of the statement of financial position under current assets. Since they are coming under current assets, they cannot be depreciated. They should not be depreciated. Okay. When assets which are held under the revaluation model are reclassified as held for sale, these assets should be revalued using the method in IAS 16 property, plant and equipment or IAS 40 investment property as appropriate to classification. So where assets held under the revaluation model are reclassified as held for sale, either they should be revalued using the IAS 16 or using the IAS 40. Okay. Tell me this. Go through this and tell me what is the answer to this.
Sir, 1,500 loss will be there, sir,
Why there will be a loss?
upon sale of the machinery.
We are not selling the machinery. Who said we are selling the machinery?
Machine, so the cost of the machine will be for 14,500 at the end of the year. In that, if we sell it for 13,000 and 500 we exclude because of the dismantling cost. The loss is 1,500, sir.
Where is the loss? You will get the loss only when you are selling the asset. Where are you selling the asset? You said that machine is not sold at the end of the year. I have underlined that also.
Yes, sir.
So how can you get a loss? Only if you sell, you will get a loss.
Can you explain, sir?
Machine is purchased when?
1st January 2001.
Yeah. So at that time, the cost was 20,000. When are you, in which year you are trying to
The
sell the
third year,
third year? So 2 years have passed.
4,000 depreciation.
Yeah. So depreciation is 2,000 per annum. 2 years have passed, so 4,000 depreciation. So 20,000 minus 4,000. Carrying amount of the asset is 16,000.
16,000.
NRV is what? 13,500. NRV is 13,500 minus 500. Cost to sell. So it is 13,000. So it is carrying amount 16,000 or 13,000, whichever is less. So it will be shown in the
13,000.
statement of financial position at 13,000.
Okay, sir. Understood.
Coming to second part of IFRS 5, that is discontinued operations. A discontinued operation is a component of an entity that has either disposed of or is classified as held for sale and represents a separate major line of business or geographical area of operations. It is part of a single coordinated plan, to dispose of a separate major line of business or geographical area of operations. And it is a subsidiary acquired exclusively with a view to resell. So a discontinued operation is a part of the business. Example of which I gave you, that 3 divisions are there, 1 division is to be sold. So it is a separate major line of business, or it may be a separate geographical location of operation. For example, we are having 3 different branches. One branch will decide to close down. So that will be on the basis of geographical area. It is part of a single coordinated plan to dispose of a separate major line of business. That means it is a part of the entity's plan to sell off one part of the business. Third, it is a subsidiary acquired exclusively. That means I'm purchasing a subsidiary with the intention to sell. I don't want to hold that as a subsidiary. I want to sell it. And why I'm purchasing that? Because it is a profitable subsidiary. I know that if I purchase it now at a lower price, I can sell it at a higher price. So that is why I'm purchasing. So that type of transaction, if it is there, then it is a discontinued operation. An entity must disclose a single amount on the face of the statement of profit or loss comprising post-tax profit or loss, that is the trading results of the discontinued operations, and I told you two things will come. First is trading results up till the date, that is up till 1st of August. And second, what will come? The post-tax gain or loss arising on the measurement of fair value less cost to sell or on the disposal of the assets constituting the discontinued operation. The analysis must disclose the revenue, expenses, and the pre-tax profit or loss of discontinued operations, related income tax expense, and the gain or loss recognized on the measurement to fair value less cost to sell or on the disposal of the assets. So these are the two things that will come in the balance sheet, in the statement of profit or loss regarding the discontinued operations. So I told you this, two things will come: trading results and the profit or loss on sale of assets. So as I told you, it will be shown on a separate line. So continuing operations, you will have revenue, cost of sales, gross profit, distribution cost, administration cost, profit from operations, then finance cost, profit before tax, income tax expense, profit from the period from continuing operations. So this will have A and C. Discontinued operations will be B in our example. Okay, so we had discontinued B, so B's operations will come as discontinued operations. A and C we are continuing, so whatever is the profit, that we call it as profit from continuing operations. That's it. Everything is there. So we have completed chapter 5. These are all chapter small topics. So don't get excited that we have completed 5 topics in this small topic. So first, second, fifth, sixth, and seventh are over. Chapter 3 we will start on Sunday. Sunday you are free now in the morning. Sunday morning, something around 9:30. I'll take the class.
Yes, sir.
You get up late on Sundays?
No, sir. If there is work, I'm ready. Otherwise, I sleep.
Sleep till?
Till 10:30.
10 o'clock.
Yes, sir.
Half my day is over. I get up at 4:30. So by 10 o'clock, half my day is over. Wait, 10 o'clock, holiday, enjoying mood.
I sleep late, sir, on Saturday. That's why. Saturday, I'll go to bed only at 1 o'clock or something. That's why.
What do you do so late?
So that Sunday I can sleep more. If any work I have, I'll finish it Saturday.
Okay. So it means that I can give you lots of work on Saturday. We will sit and do it. Tomorrow you are having any class, online sessions? AFM ka?
No, sir.
Nihal
No,
sir,
sir. No class.
he is not taking, no? Fine. So
Yes, sir. Tomorrow at what time, sir?
tomorrow I will not take. I will take it now directly on Sunday. Sunday morning I will take it.
Okay, sir.
Okay? Yeah. Chalo. Stop here. Bye.